we're going to have start off with a town hall discussion. I'm going to start that off with our speaker. And then if someone has a question, kindly come up to the mic here. State your question clearly. Make sure it's grammatically correct. Make sure it's interesting. And then we're going to go into some pitches from people that have applied or requested to pitch. And then we'll pretty much make a full evening out of it. So without further ado, I want to introduce our featured guest. He's an entrepreneur, investor, world traveler, and he's someone that you see all over Silicon Valley. So let's hear it for Ephraim Lindenbaum.
Well, thank you, everybody. So how many people here are actual entrepreneurs or planning to be entrepreneurs? Great, excellent blend. So I'm a recovering entrepreneur as well. So I have sat in your chair before, I have built a company in the Valley, and I know how painful it is. So like total sympathy for all of you. Thank you for coming out, because you probably have better things to do. So I started my first company when I was in high school, my second company in lieu of going to university. I grew that company through the 90s in Silicon Valley, exited in a merger and acquisition in 1999. So I was sort of the dumbest guy you met for not going public in the first dot-com boom. And about 3 years later, the smartest guy you've ever met for not going public in the dot-com boom, right? And then spun up Advanced Ventures. So we're about 15 years old. We're a Silicon Valley venture fund. We invest in early stage startups. We're currently investing out of our third fund, and we invest across what we call themes. So we have three core themes at our firm. We invest in information technology, which in our case today is vertical information technology. So digital health, real estate, financial technology. We invest in communications, which today is mobility and IoT, or the Internet of Things. And then we invest in sustainability, and that's agriculture technology, food technology, and energy technology. So those are our sort of themes that we invest in. And in turn, we work with earliest stage startups, starting from about the point where companies have developed their first product. We like to see a little bit of what we would call customer traction, some proof points out there. And Rob's going to, and I'll speak a lot about this during the course of the evening tonight, but I hope to give you a little bit of insight into how we think on the venture capital side, because we do a really good job creating all of this mystique around our business, right? And if you really look behind the curtain, we're just a bunch of people making some good guesses, just like you are about your businesses. So essentially, Rob's going to ask some good questions. I welcome questions from you. I've done this with Robin many times, and my goal is to hopefully get all of your questions answered if possible.
Well, let's touch on a little bit of what you said. So you're a venture capitalist. We've held many, many pitch events over the last few years. Our most recent pitch event was July 1st. But we had a panel of pretty much, well, actually everyone that showed up was an angel investor. The one VC that we had slotted wiped out.
They do that. Terrible. You should.
I'll tell you later.
Okay.
But fundamentally, what is the difference between an angel investor and a VC? How do you become an angel investor? How do you become a VC?
Sure.
Why would you become an angel investor? Why would you become a VC?
Sure.
And how are their investing mindsets different?
Certainly. Well, I mean, there's just, so first and foremost, anybody that invests in their neighbor's company or anybody that gave you a check to invest in your company is an angel investor, right? And I think we've qualified a bunch of great titles around it. It's all branding and marketing, but essentially that's just an individual typically that invests. And there's broadly a number of different categories of investors out there. Typically there's the angel investor. Today we have what they call family offices, and what a family office is a high net worth family or group of families that have come together to invest in startups. And then there are venture capitalists. And the big difference, the binary difference in all of that is the institutional nature of our money, which means where do we get our money? Some of it's ours, of course, but this isn't essentially all of our own money. We're investing on behalf of investors, which means that essentially we're providing them, to a degree, a service, providing our expertise, and ideally delivering a higher rate of return than others. So, if you want to just really boil it down, the difference between an angel and a venture capitalist is where the money comes from. An angel historically is investing their personal money, and a venture capitalist is really investing not only theirs, but others' money as well.
Because of that, some people think it's easier to get funded by an angel investor versus a VC. A VC has a fiduciary responsibility to his or her investors. An angel has only one fiduciary, to himself or herself, and if they want to make foolish decisions, that's their business. So is that an urban myth that an angel is easier to get money from?
Well, I mean, I think really what it comes down to, well, there's the 3 Fs, right? Friends, family, and fools that invest as angels in a lot of cases. But I think what oftentimes happens is these are people that are close in your circle, right? So these are people that know you. They know how hard you're working at your idea or what you're trying to achieve out there. And oftentimes they believe in that. That may or may not be applying market governance or governance on a technology side or figuring out how big that company could be one day. They're really buying into you and giving you the opportunity to drive the business, right? So that oftentimes is easier. I will tell you, the hurdles for a venture capitalist to invest is much, much higher. I mean, we're investing not only our own money, we're investing other people's money, right? And then we have a whole series of other elements of our business that you need to understand, right? If you think about it, roundly 80% of startups that are funded by venture capitalists fail. Okay, so start thinking there, right? It means 8 out of 10 deals we're going to do are just going to fail. So that's a really bad place to start from a percentage level, right? So what do we have to do? So that's basically saying, if I'm going to invest in 10 companies, 8 fail, 2 are left. Those 2 have to pay for the investment in those other 8 companies, or all 10 in total. And then on top of that, return the investment that my investors are expecting on top of that. So when you hear about venture capitalists really needing to find companies that can be very big opportunities, the reason for that is because most of them are going to fail. I mean, and we've been very lucky. I think our failure rate's like 68%, right? Which makes us like super smart, right? But that's still 42% fail, right? That's like 4.2% out of 10. So at the end of the day, you really have to have a business that is going to be venture capable for us to invest. Now, angels don't have that responsibility. If you return investment to them, that's great. So they're not constrained by the same requirements.
So you have a higher standard.
Well, we're not saying that we have a standard. We have a different standard, right?
You want a home run, not a single.
We always have to swing for the fence because we know 8 out of the 10 balls aren't going to make it, right? So those 2 have to go long, and we have to clear the bases.
Right. And the worst thing that can happen is you could lose your funding, or you could lose your job as an angel, as a VC versus an angel. The worst thing you have is they could lose their money. I don't know which is worse, but
well, yeah. I mean, it's not as easy as that, but right. I mean, certainly, people are not going to invest in us if we don't come up with some really good return on investment and choose some great entrepreneurs that are out there, and you all turn out to be Uber 2.0, and we all get rich together, which is great. And then those entrepreneurs end up investing with us in the future.
Okay. We used to do a lot more pitch events than we do now, and the challenge wasn't getting an investor panel. We don't have a problem getting investors together. The problem isn't getting a venue or an audience or the pizza. The challenge really was having solid startups that could pitch, and ideally, the standard would be they have a product, they have users, they have an addressable market, and hopefully a little bit of revenue. But what happens every time we put out a call for people that want to pitch, they have an idea and basically a concept stage startup. So is that something you invest in, or how would you address someone that came to you and said, hey, I have a great idea, or I have a startup, but essentially it was just a concept stage startup?
Sure. Well, first, it depends who you are, right? If you're, a co-founder with Mark Zuckerberg over at Facebook and you had a great concept stage, it's probably high probability we're going to write you a check, right? Could be a cotton candy company, we'll probably write you a check. Now, that being said, if it's your first startup or your second startup and you haven't reached that level of exit or success in the past, then, our fundamental idea would be, let's take a look at this. Why don't you build it for a while? Why don't you come back to us and then we'll chat if we're feeling, happy about that. I think beyond that, from our standpoint, concept stage companies are very challenging because, really building companies takes a lot more than a great piece of technology. It takes a lot more than, a great salesperson. It takes a lot more than money. It takes a team. And so, the things that we look for in founders, in teams, in technology are oftentimes very different than the way you look at it. We've seen the best technology in the world fail constantly. It's all about the team. And the best technology doesn't always win. The technology that makes it to market and can really essentially scale wins oftentimes. So, from a concept stage, it's tough. Now, to Rob's point about why these startups aren't showing up to the pitch fest as often as you like. Well, for the last 5 or 6, well, let's call it 3.5 years, there's been a tremendous amount of capital. The markets came roaring back after the last collapse. The people that are historically investors, both angels as well as venture capitalists, have had a tremendous amount of money. So the ability to essentially, find funding without coming out and really working hard on the pitch side has been easy. Now that changed on Monday. So it's really going to be different. So I would expect the quality of your pitches to go up dramatically. The angel market, if it hasn't stalled, it's going to get a lot slower. The general sentiment amongst angels are if they're feeling wealthy, they write checks. If they're not feeling wealthy, they don't write checks. And the problem with that is it's not always rational. And they don't have to be because it's their money and they can give it to whoever they want. So, in the Valley here, it's been easy to find money. There's also alternative sources for money like crowdfunding and other models out there. So that's probably worn on that. However, over the next 2 or 3 years, I think it will go up much higher.
Okay. Well, how is crowdfunding changing the whole landscape?
Well, I think like any new technology or new approach to a financial product or service, it came out with a bang. I think what's happening now is there are certainly areas where crowdfunding works. There are certain areas where it doesn't. I mean, I think the statistics, and my friends at Indiegogo will tell you that if you have a software company, you have very little hope of getting funded in crowdfunding. If you have a product company, if you're making the next talking pet cube, yeah, you can probably find 300,000 people out there that will give you $20 and maybe you'll get a shot at it. I think what's happening now is it's now been long enough from those, or enough time has elapsed from those initial investments to the failure factor is now coming in, right? Which is people have put forward money to get a product. Now here we are 18 months later, that product isn't arriving. It's hard. Starting companies is hard. I commend all of you guys. I've been there. It's really, really hard, and a lot of them fail. So going and collecting people's money without truly understanding how you're going to deliver is a challenge, right? Now, when you take our money and you don't know how to deliver, we're all on the same team. We understand. That's part of the rules, right? When you take someone from Iowa's money who could have spent that money on their kids' college fund or their retirement savings or something like that, and you don't deliver a product, it's a lot more meaningful. So I think we'll see a wave over the next 18 months of crowdfunding sort of disasters or blowouts, as we'd say. And I think that's going to change the perspective. Now, that being said, the technology associated with crowdfunding and the regulatory changes have certainly helped high net worth individuals spread their money out. It's done for the, it's effectively done for the market, it's created an eBay experience in the financial space, right? And a lot of times, if you think about eBay, like antiques is a great example. Prior to eBay, antiques or art were very expensive. That's because there were only a few of them, and in your geographic region, there was only 1 or 2, so it commanded a higher price point, right? But all of a sudden, when there are 100 in the world and you can access them all at the same time, that drives the price down. So that's what we've seen happen in a way with crowdfunding as well, or Angels List as well, right? When there's only one great startup and a bunch of angels around, they get a really great price. But if I can go to the great mall of startups and I can pick up any one I'd like, it also makes it challenging as well.
Yeah. Silicon Valley touts itself as a place of innovation and problem solving. And there are real fundamental problems that I think need to be solved in the world, like clean air, clean water, enough food, housing, education, health. But there's a spate of what I consider entertainment type business models that are funded and, I guess have high valuations. So is that the chicken or the egg or the tail wagging the dog? Is that because the investors want a quick return and that's what entrepreneurs come up with, or they're afraid to tackle real problems? I mean, clean water and sufficient water, that's a real problem, right?
Certainly. Well,
So is there someone actively funding entrepreneurs that want to solve that problem?
Certainly we are. Oh, yeah. We're Water Tech. If you follow, everybody should follow us on Twitter. It's at advancedventures.com. We're always talking about that. We're always looking at that kind of technology. The low-hanging fruit is always expendable income, right? So, alcohol, entertainment, things like that are always ultimately the lowest hanging fruit. Social elements today have become part of that, dating, etc. All fall into that broader category of expendable income. So it's easier to drive those. It's a lower hurdle to get them out there, and they're very trend oriented, right? And as you go high enough up the entertainment financing food chain, VCs don't even do it, because at some point gaming or entertainment is really a hit driven business, right? And their odds are even lesser than ours, right? We're looking at 2 in 10 success. They're looking at like 1 in 100. So you've got to have I think much more resources and much more skill to pick and choose those choices. So that's why that's the case. But sustainability is very hot. I think I'm going to do a shout out to Roger Royce here in the back and say that agriculture technology, food technology, and in turn sustainable clean water, clean air are all very important problems. I mean, there's something called the 2050 problem, which means by 2050 the world will not be able to feed itself. Okay, all right, that's a big problem. Tinder, not a big problem. That, big problem.
Depends.
So we're all working on it. Just, if you're not eating, dating gets bad. Okay.
All right. What was your best investment ever, and what was your worst investment ever?
Okay. Well, best investment, we've had about 11 exits, and they span lots of different categories. Best investment in terms of return was a company called iLive.com that was bought and went public during the internet boom and had 44 times return on investment. So we were very excited about that one. But I think the most meaningful were with entrepreneurs that we love. And, for example, we just funded a group of entrepreneurs for the 4th time. And they've had 2 exits for us, and that's more meaningful. I mean, after a while, the return on investment, while important, it's who you're going to work with. I see them, I talk to them sometimes every day, and we're very active VC. I'm on 6 boards, and I will tell you, I talk to almost every single one of our CEOs, if not every day, every other day, oftentimes more than my family. So you often want to like those people.
Okay. So we're going to hear some pitches a little bit later on. What constitutes an effective pitch for you? Is it the team, the product, delivery, good hair, good teeth? What's effective for you?
All of the above. No. The ability to quickly and easily articulate your mission. A great venture capitalist, friend of mine once said, the best deals he ever did were the smallest pitch decks. I.e., he said he would fund a company if they could explain themselves in a single slide to him. And I asked him, what was the shortest pitch deck you ever funded? And he said 3 slides. And he said it was just a brilliant idea. It made so much sense that you really didn't need more than 3 slides to fund it. So a big part of it is being able to articulate what you're doing, the more effectively and simply you can explain it, and then in turn really be able to present the market space as being large enough for you to build a big enough company for us to be interested. Because you can build a great company, but not all of them are venture companies. So if you're pitching to a venture capitalist, you really need to have a company that's going to fit that model.
Why don't we take some questions from the audience? This is a town hall format. So does anyone have a question for F?
One of the presumptions that people distinguish a venture capitalist versus an angel investor is the amount that they invest, right? Is that a fair thing? I mean, if you say you want to invest $1 million, you're categorized as venture capitalist versus an angel investor, or does money decide who you are at all?
Well, to my point earlier, I mean, it really depends where the money comes from. That's really what defines it, right? Is this a business, i.e., we raise money from people, we invest money in you, you become successful, we make money, we give it back to them. That's a cycle, right? Like any other business. An angel investor doesn't work like that. They write a check out of their checkbook. In turn, if you're successful, they'll get a return on their investment. That doesn't have to meet any criteria other than their particular choice. So if they feel that they've reached that point where a smaller company could be successful, that'd be great. So, I've seen angels write $100 million checks. That still doesn't make them venture capitalists. I've seen VCs write $10,000 checks. That still makes them a VC.
That's pretty interesting, because I've heard all these terms thrown around. Super angel, micro VC. Which is bigger, super angel or micro VC?
I don't know. I some of these terms just catch me off guard. I heard one the other day I won't repeat, but it was just totally bizarre. I'm like, Really? Okay. Well, I mean, I think this is the flood of marketing people into our industry, right? Before it was just simple. We were simple VCs. You'd come to us, you'd give us your pitch. We either liked it, we didn't. We gave you a check, we didn't. Now there's, all these cycles and stuff like that. Before you came to ROM, came to a bunch of these, got to know what you're doing. You showed up at our place, we gave you money. Now there's all kinds of complexities there. Okay. More questions?
Step up to the mic.
Oh, coming up here.
Okay, we have a celebrity questioner today.
Thanks a lot. I always learn something whenever I talk to UF, so this is good. That's why I'm quite hesitant to have to come up here and disagree with you.
There you go. Oh, I love it.
But you said something, that analogy about the antiques and crowdfunding. I've always thought about it the other way around, and it seems like antiques, they're all kind of the same, right? So it makes sense that having new entrants into the market would drive the price down. But not all startups are the same. And what crowdfunding is doing, it's allowing those guys in Iowa to come here into the valley and compete for these companies, and you would think that would drive the price of start valuations up. What have you been seeing in practice? What's actually been happening aside from all the theory that we come up with?
So I mean, it's quite the opposite. I mean, it's to a large degree driven down the overall valuation in terms of some of those. Now, all valuations are high right now. Leveling the playing field is a different subject matter, and I agree. Crowdfunding has been helpful in that regard. But if you look at the successful crowdfunding platforms, the greater percentage of those startups are located in tech hubs, whether that's New York, Silicon Valley, Austin, Chicago, Ukraine, London, etc. There are the occasional folks from North Dakota who are surfacing these companies, but those tend to be much more vertical focused. So that's like AgFunder, for example, is surfacing crowdfunding options in that particular category. But I know a lot of, for example, vertical focused companies on angel lists that just can't get any traction because, the bulk of those investors are sort of following lead investors, which are historically software investors. So that's the case.
I've been here for about 3-4 months now, and Googled everything, and I've been to a whole bunch of Rob's, these meetups. As far as the investors are concerned, what I've basically heard is that they only entertain people who've been introduced to them. And, what about the foreign startups who come over here? What would you suggest to them?
Well, I mean, that's the great part. Now more than ever in history, there's a huge ecosystem available at all levels. So whether you want to play it upon your historic ethnic lines, for example, there's a tremendous amount of resources on that side. Whether you like to look at it from the standpoint of, startup co-work locations like West, they have VCs in there all the time. So your ability to be exposed to VCs is much higher than it's ever been. Your ability to find resources for financing is better than it's ever been. There has never been a better time. Well, I would say last week was better, but there is never, other than last week or prior to July, a better time to ever start a startup in Silicon Valley. It has never been easier to raise money, and I've been here for a long time. There have never been as many resources, whether it's training resources, networking, socializing resources. There are co-work spaces. There are, vertical financiers that either operating on sort of country lines, vertical lines, et cetera. And all of these players all really make it very easy. And then, of course, there's crowdfunding and some of these other categories as well.
What are the pros and cons of asking for too little money or too much money, and do you fund companies that just need some initial capital, like 50,000 or so? Is there an advantage to getting the first step and then going for a higher amount?
Well, those are all really good questions, and they oftentimes are very vertical focused and very company focused in terms of what's the right amount to raise. In our particular case, a company that'll only need $50,000 probably won't reach the scale over time that we're looking for. And if there is one and you can prove it, please come see me, because that's really who I want to invest in. Otherwise, I think that really depends on the circumstances of the company. I mean, in theory, you want to take as little money as possible and be as successful as possible, because then you own more of your company. Now, that's not always the case in terms of the market, right? You need to spend money to make money. You need to spend money to drive customers, and that's our job, right? We're there to give you the money and the resource to help you do that. So it just really depends on your business.
I was going to ask a counter question to something you mentioned again earlier. You said prior to July, it was a great time. Can you elaborate on what's going on?
I mean, there's just a higher level of uncertainty right now. You know, what's happened in China with devaluation, multiple countries have devaluated their currency. Whenever there's a downturn of any magnitude, really it's the sentiment, right? You know, when we're talking about angels earlier, if people feel like their stocks are up 40% over the last 3 years, they're willing to give entrepreneurs like you folks $50,000 or $100,000 or more to get started, right? But when they're feeling like that's retrenched, in this case, I think the Nasdaq's maybe, I don't know where they are today, but like 100% of the value on the year. So it has made 0 gains since January 1, right? So if you're an angel and you have a bunch of money, but you're not making money on your money, they tend to not be as willing to, play that in even riskier setting. So, I think it's going to be a very rocky period here until people figure it out. Hopefully it won't affect too many people. But I'll tell you, one of our startups was talking to someone from Salesforce, a super angel from Salesforce, who was writing a very big check. And they met with them last week. They made a commitment. They talked to them today, and they started saying, well, let's wait a couple months. And so that's very painful. If you're a small startup and you're relying on that investment to keep the doors open next month and you don't get it, it's very painful.
How is the sustainability sector doing, and what's really hot right now?
Okay. So, agriculture technology is great. Food technology is super interesting. Energy technology. We like water. Water we broadly call ag or food or energy because it all fits in somewhere there. But those are all categories that are very, very interesting to us. And, I don't think that any of these particular drought crises, change that. I think what changes that is we're looking at 13 plus billion people on the same planet. So that's like 2x. Like that means that this room will be twice as filled with the same amount of pizza in 25 years. So, these are issues. So we need to figure out how to produce more food, how to produce more clean water, how to live more efficiently, because it's going to get very crowded very fast. So that's an important factor. Great. Next question.
Once you decide to invest on a startup, what do you do in order to monitor the entrepreneurs in order to make sure that they will reach the return of investment that you are expecting?
Sure. Well, so, we're fairly active as a VC, but, our decision to invest means that we've got a high level of confidence in the entrepreneurs. So, we're not going to, our entrepreneurs talk to me, for example, when I'm on the board every day, not because they're trying to decide what to do next. What they're calling me up for is saying, hey, who do you know at so-and-so company because I want to go sell something to them? Can you make an introduction? Or we need a manufacturer in China because we're doing a new product. Who do you know over there that can help us and give us a great deal? So that's what they're calling me. I'm a resource to them. So at an incubator level, you're going to get a lot more support. At a venture level, it gets thinner and thinner. Oftentimes sort of the maximum bar you'll see out of a VC is a single, monthly board meeting, right? So, part of your job is to keep us informed, and the best entrepreneurs I've ever had made me work hard. They asked me for things, and that was great, and that means that we're more collaborative and the companies are more successful. I think you had a question?
Hi. So you mentioned that more than an idea, you guys invest in the team, right? So it's always been hard for me to understand what does a good team mean. Like, it's a very subjective term. Does it mean that the team members are from a good grad school? Does it mean that they have a good experience in the field that your startup is in? Or is it combination of all?
All of the above, and how well they work together, right? If there's any founder conflict, one of the number one reasons startup fails is because of founder conflict, right? And, when founders get together in a startup, they're beginning a journey that can last 5, 10, 15, 20 years. So it's as important as your spouse, your mate, whatnot, in terms of how well you get along with those people. And things are not going to be easy, right? Think about going on the worst road trip with your spouse you could ever go in, and then doing that with very little money and no certainty of where you're going. And that's a lot like what it's going to be like to be in a startup. So you've got to be able to get along. You've got to be able to be well-rounded, right? I mean, if everybody's an engineer and there's no one who can sell the product, or there's no one who can strategically think through the company, that's probably not a good team. If it's a bunch of people that can strategically think or sell stuff, but there's no one to build it, that's probably not a good team either. So you're really looking for a balanced fit. And I mean, you folks are in the best position. If we were sitting here in Nashville, Tennessee right now, you guys, and you were looking for a founder, you'd never find it. I mean, right now, in this room right here are a bunch of great founders. I mean, you guys are all top tier in comparison to what you would find in many, many other places around the world. So this is, you know, if you hold up your hand, how many, you know, MBAs in the room? How many, there you go, how many masters of engineering in the room? I think there's probably a whole bunch. So, you know, you two should get together because you could form a company and build a fundamentally good team. So you really have to be able to think through those pieces, get along, have well-rounded, right? Don't be stilted. And then the other thing is, you know, a little conflict is, you know, is always good. You know, there's a great Chinese proverb that says, if two partners think alike, one is not necessary. So, you know, you really want to be in a position where, you know, you're being challenged by, you know, your co-founders. You know, if it's marketing's challenging sales. Marketing is challenging engineering. Sales is challenging engineering. And you know, you drive that intensity to build those companies. Please.
If you're using crowdfunding to gain traction, what's more important, and in what relationship, profit or numbers?
In terms of driving to drain, you mean to sell product?
Right. No, would you rather sell more of the item or get a higher margin on the item, or is there some other trade-off?
It depends on what you're selling, right? I mean, certainly volume equals scale equals higher margins by default, right? So if you're going to sell 10 of something for a lot of money, your cost of goods to produce those in most cases are pretty high since they're only 10. If you're going to sell 1 million of them, your cost of goods most likely will have gone down. So, you know, at some point there's a key milestone or inflection point in that volume versus pricing quadrant that should be fairly easy to define, right? And I don't think from a venture capitalist side, we don't care. What we want to see is you're selling product, you have good customers, right? And ideally repeat customers. We want to know how much those customers are worth and for how long. And we want to know that you can continue to sell them things for a long period of time.
You talk about teams. You talk about like, because I've heard that like investors look for co-founders. You got to have a co-founder. Everybody says you got to have a co-founder. Now,
what happens if you get hit by a bus?
No, yeah, there you go. My point is that like where we come from, it's usually one person who's got a company, who's got a bunch of developers, and you build your product, and then you come over here to do a startup. So are we talking, when you say, does it have to be co-founders, or it can be a good team? And when I say a team, just share, you know, like we just give them shares.
I mean, if you can write the big checks to hire the top tier guys, that's cool too. I mean, you know, it's all about the quality of the team. They don't have to be co-founders. That's just all lingo, right? We like to see, you know, teams where everybody's interests are aligned, and that's why there are co-founders. If all the co-founders have an equal share, the more the company sells for, the more they all make. If you have the predominant share and everybody else has a very little bit, their arc is very different than yours. If this company sells for only a little, you still make a lot. If the company sells for a little, they don't make a lot. They have to, you know, their metrics are exponents of yours, and they're rounding errors oftentimes in an exit. So there's a real incentive to give people stock in your company. I mean, you know, owning all your stock here is not considered a win. I mean, having 20 people who are also on the same journey with you, who are going to kill themselves because if you succeed, they succeed, and everybody wins, that's who we want to see. You know, that's what we want, because then all of you will come back to us when you have your next idea. So it's all about marketing. Great. More questions?
Are you considering investing only in US-based companies or in other geographies as well, like India, for example, where it's the happening place right now?
Sure. Well, I mean, some of the venture capital funds do invest in India. It depends on your mandate, right? We historically have been predominantly U.S. investors, although we did have an office in Israel for many years and invested there as well. We're currently investing in a European-based startup, which actually has roots in both Germany and Turkey. So, I won't say there's rules there, but that being said, it depends where the companies are operating. If a company is going to operate in India, our expertise in dealing with the Indian market is low. So you really want to do that. And the great part is in India, for example, there are tons of venture funds. I've probably got 10 friends off the top of my head that were venture capitalists here, were of Indian descent, and went back and are killing it. I mean, they are killing it over there. They're making like 10 times as much as we are, and they probably have really big houses and no traffic. Well, worse traffic.
Can you introduce us to them?
It's really very easy. I mean, and that's the great part is, like I said, this is really the easiest time. I mean, there's a high probability you went out to IIT, right? Maybe you did. Which campus?
Oh, Palo Alto.
No, IIT.
Oh, IIT. No, not IIT.
Okay, well, the reason why is because there's a whole network there, right? I mean, if you went to IIT and you went, depending on which campus, there's like a bunch of guys that'll take that meeting with you on no basis that they came from the same place. I mean, if you're from Chennai, there are VCs that are from Chennai, right? So if you're from University of Aachen in Germany, you can connect up with people from that environment. So it's much easier, right? It's the internet. I mean, you can get through to these people. If you've got a good idea, you'll get through.
Thai network.
Thai is easy. I mean, Thai is great. I mean, I've got tons of friends in Thai. I mean, and they're doing a great job. I mean, and all other verticals. I mean, almost every single nationality that's represented, for the most part, in Silicon Valley has some kind of a support network around it. Whether it's Swiss or Scandinavian or German, there's tons of support right now, which is awesome. And what they want is they want you to be successful here, and they want you to go back there and hire a bunch of people. So next question.
Do you invest in smart grid and energy technologies?
We have historically. I think we're less inclined to do that today just because of the cycle time it takes in order for that technology to really prove to be successful in the market. It takes a long time. In fact, we see clean tech as sort of following the same time horizon as life science, which is typically 10 to 12 years before a company reaches an exit stage. So only the right kind of investors can invest in that category. The other thing is it's very hard to test that, right? It's very easy to go get a bunch of people to try out your mobile app. It's really hard to get a bunch of power companies to put you on their grid. So, you've got to really think through that well. China is a big buyer right now of grid. They've got huge problems in the grid. They're trying to spend a lot of money on it, and they're willing to try things where other companies haven't. So that's an interesting category, but tough. Next question. Okay, this is the last one because I think we got an 8 p.m. pitch time. Awesome.
So my product is slated for to be out on the market about 2 months.
Congratulations.
And I wonder, if I should just go along without getting any funding and get the user base up there first, or should I get the funding now while I show the product if you liked it, and I should take the funding at this point?
Well, I mean, look, my first rule is if anybody offers you money and, it's legal and they're not insane, you take the money. I mean, you don't ask. As long as it's a reasonable deal and you've got a good lawyer involved. I think there was a lawyer here earlier. You can hire her, and she can make sure that you're not, doing a bad deal. You take the money. Always take the money if you're an entrepreneur, because you never know when you're not going to get any more. And, if you hold out hoping for the next great deal, you're most likely going to miss your market, right? And now if you can go out and be successful without the money, then don't take the money. I mean, if you don't need our money, don't take it. Own 100% of your company.
But from your experience, how likely would I get the funding if I don't have any customers yet? And I get the finished product, not really tested at the market.
Right. So if you came to see us, we'd tell you to go get some customers and come back. So, I guess that frames it up. We want to see traction. We actually want to see revenue. So you need to have customers, you need to have revenue, we need to be able to call your customers, they need to be able to tell us why it's the coolest thing they've ever used in before. That's what we're going to do as part of our process. So that's it. Thanks. Pitch time? All right, thanks.
I'm going to start off with Dave.
Oh, really?
who thinks he's the next unicorn.
Sure. Okay.
Okay, time starting. Imagine that you could combine the all-encompassing worldview of Google Earth with the kind of engaging excitement of a video game like Grand Theft Auto and the sales volume and potential of Amazon. Well, my team at GeoPogo is combining all these things together to build a 3D interactive model of the world which integrates indoor and outdoor spaces. Let me tell you a little bit more about my team, because F said that was so important. Okay? My team includes a lot of senior leaders. Senior leaders at Pixar, think great visuals. Senior leaders at Yahoo, Brocade, Newmark, Cornish & Carey, which is the largest commercial real estate company in Silicon Valley. And now we have the support of the California Academy of Sciences, because cultural resources are as important to us as retail outcome. Okay, so with our senior experience, connections, and unique vision, we have newly patented technology that will quickly disrupt a $1.5 trillion market. Our financial upside is enormous, with a projected revenue of $300 million in 5 years. And our unlimited revenue stream ultimately will parallel the bricks and mortar world. That's because we are creating the world in which the virtual foot traffic will pass down. So how will this work monetarily? The way that this would work is, from a proprietor side, you would anchor your space into the real, virtual model of the world, and you would pay us a cut of your transactions. And you could do more with your virtual space than you actually can in your bricks and mortar existence. From a visitor standpoint, you would have the opportunity to visit spaces that you normally pay to go to at a fraction of the cost and with much more ease.
Dave, stay there. 6 minutes of feedback and questions.
Yes.
All right. So great sort of high-level pitch. I have actually very little idea of what that is. My sense is you're kind of taking the virtual online mall concept to the next level. My questions are going to be, how much does it cost to build it?
Okay.
How much?
Okay.
How much does it cost to build it?
Okay. To do a laser, this is combining video streaming, 3D laser scanning, and virtual reality.
Awesome.
So what it costs to, say, on the first level, you're doing a university campus. That would cost about $50,000 to a university campus that way. Then you have a tool which you use in order to recruit students, a tool which you use to manage your facilities, and a tool that you use for everybody to navigate your spaces, which are pretty complex when you have an organic structure.
How much does that cost then?
$50,000.
But not for you to build it. That's what the customer pays you, correct?
Right.
I'm asking what it takes to build your platform.
Oh, okay. To build a platform like that to begin with would be about $40,000 in partnership with
for your platform, your company's software technology. How much does it cost to build your technology?
To develop the technology.
Your technology, right? Your platform that
right.
can bring together global and gaming.
Our estimate for that is $500,000, and that's what we would use our initial funding for.
Okay, so that's challenging to me.
Yes.
Because my general thought process is combining Google Earth, World of Warcraft,
yes,
and Amazon is definitely going to cost more than $500,000.
Okay.
So I'm just telling you, when you're pitching someone like me, you've reached a credibility gap.
Okay.
Which says if you can build all that for $500,000, okay, I've seen one of our companies spend $500,000 on a trade show. Okay.
Okay.
So my general perspective is it's going to cost a lot more than that, and I think that you really need to have a really, really good handle on exactly what it's going to cost. Now, if you said it will cost $500,000 to get you to an MVP level 1, and then you said it will ultimately cost you $110 million over the next 5 years to build what you were doing, I might have been genuinely interested.
Okay, well, maybe I didn't understand your question properly because I described what you would do with a university campus.
No.
I didn't describe what you would do to build the world.
No, I'm right. That's what I'm asking. Is
right.
What does it cost to build your technology platform?
To do the whole world, we don't know at this point.
Okay.
But that's not where we're beginning.
Okay, so again, if you're going to combine Google Earth,
yes.
we just need to know where that is at. Okay, so what do you think your user acquisition cost is?
Oh, that's a very interesting question. Well, for the first level where we're acting like a general contractor and we are selling our product to individual property owners, whether they be private or institutional, then we see our cost being very low because of the connections we have.
Well, but I mean, it still takes time and money to bring on a customer. If your company, well, let me just explain how you come up with user acquisition costs. Is you take all of the things that it takes to secure that customer, and that becomes part of your user acquisition cost, both at the base level of how much did it cost in marketing. And my sense is, although you're a very connected team, at some point in the game, you're going to run out of connections.
Right.
What we're asking you is, what is it going to cost when you run out of connections?
Okay, well, here's the business model. Here's our thinking, and you can tell me whether this is like bad thinking or not. I'm thinking that with 500 key connections, we're going to get a 1% hit rate. That's our target. We're going to get 5 customers to build models. Those models will be a proof of concept. They will demonstrate the integration of video streaming, 3D laser scanning, and virtual reality in such a way that then we will get the investment funding that we need in order to start freelancing, going around the world, starting with a neighborhood, then a city, then another city, and building our model that way.
I mean, I think that's probably reasonable. I mean, if you can, essentially bring on a couple of for-hire customers.
Exactly.
Build that out, then scale. Right. I mean, I think that's pretty reasonable. I mean, I think the element that is challenging from someone on the venture space is what we're looking for as a software company, that you're going to build a singular piece of software.
Right.
And ideally sell that piece of software a million times.
Right.
So you've got an inherent cost in developing and continuing to develop that one piece of software, but you're continuing to sell it in much higher volume, thus bringing down your user acquisition cost and bringing up your ultimate margin, right? So, but what you're really talking about is almost a service business to a large degree.
In the first stage, which is the general contractor stage.
Which is certainly okay. It's just not an
Then in the landlord stage, once you build a neighborhood or city and then larger scale, then you're the landlord of the world. You own the advertising space. You own the connection potential. And in that case, I mean, user acquisition costs, then what you're doing, you're having to go out and basically attract the public in the same way a company like Uber or Google. So.
Yeah, no, exactly. So, so in the last few minutes, follow up with us when you hit the landlord stage.
Okay.
I'd like to see how it works out.
Okay.
That's cool.
Awesome.
Thank you.
Okay.
Well done.
Thank you.
Okay, so just to reiterate the format, 2 minutes, no slides, followed by 6 minutes of feedback. It's a public event, so to be totally in compliance, none of these presenters is stating an ask with the dollar amount. However, F is going to get their executive summaries, which states the dollar amount. And so that's the reason why you're not hearing someone say, I want X amount of money, like you see on TV and like you see at other events, which really isn't totally in compliance. Our next presenter is Joe of Lucid. Let's hear it for Joe.
Okay. Hello, everyone. Hello, F.
Hey, Joe.
Love the name.
Good to see you again. Thank you.
Yes. All right, let's put a little higher. So I'm Joe from Lucidcam, from Lucid VR. Our first product is Lucidcam, and it's a VR consumer camera, right? How many people have heard of VR? Right, so pretty much everybody. The interesting thing about the Valley is that everybody pretty much knows about virtual reality, but how do we bring virtual reality to the masses is being able to give them the content creation ability, and that's what we're really trying to do. So we're aiming at the consumer. So we have 180 3D stereoscopic camera. This isn't actually a dummy camera, but it's the same size. We have 2 lenses and 180 degrees of 3D content. So what we're trying to do is make a really shareable type of product with content on our app, our Lucid app. It's going to be released tomorrow, and being able to have that shareable content creation, we think will be able to really bring the VR industry to the world. So we're really excited. We are in the last prototype stage, and our app will be released tomorrow. Thank you.
Okay. Thank you. 40 seconds to spare. Nice. All right, great. Well, we had a brief conversation earlier. I think it's an interesting space. In general, we're not virtual reality investors. However, I do have a lot of good friends at GoPro, so I guess my question is, in looking through this, how do you feel you're going to compete with their offerings in the market?
Yeah, and I think it's really towards that kind of democratization of VR. They're going to be coming out with more heavy-duty 360 type of content, storage heavy. Their new GoPros are getting smaller and smaller, and eventually, we will have that competition, or not eventually, but we will from the get-go. But being able to have that initial start with the average consumer, they're kind of going like, the prosumer kind of get the higher end consumer. And trying to target that.
So I guess my core question is, why build hardware? I mean, why build hardware?
Yeah, it's hard, right?
Well, I mean, if you've got cool software, there's plenty of great hardware like GoPro out there. Why don't you just build great software and not have to worry about a supply chain and all the fluctuations and issues and cash that goes with that?
Well, it goes back to our strength of our team. We actually have a really strong supply chain team, and as well as hardware team, as well as our firmware. And so we're making a lot of innovations in that space. Just yesterday, we were able to lower the average cost per unit.
What's your BOM?
So as of yesterday, it would be $80.
Your BOM's 80?
Yeah.
FOB China or FOB here?
This is China.
Your BOM's 80 FOB China?
Yeah.
So that means your retail SKU is $199?
So so we're going to also have an Indiegogo crowdfunding campaign, and our early bird will be $299 with a $400.
So you're not any cheaper than GoPro then?
Yeah.
You're the price of GoPro.
Once GoPro releases, they're own
one, the 4, the 8, the 16.
So their own VR
right,
cubes, and that have that 360
so you
the 180 experience.
So I guess my general perspective is, but you're the same price. So like if you said, hey, this thing cost you $23 and you're selling it for $49.95, and now everybody can buy it for much cheaper. I mean, I buy that as democratization. I can't find the democratization in this story then.
Yeah. So I mean, if you look at all these other ones, like say Sphericam or
No. I'm not interested in what they're not doing right and you're not doing wrong. If they're all wrong, it doesn't matter. I want to know what your if your SKU is $299 and I can buy GoPro for $299, why would I buy an unproven manufacturer if I can get a GoPro?
Right. So it's really about the shareable app that we'll also be having as well. Obviously they'll be coming out with something cool and stuff, but we're going to be really trying to target and brand ourselves as for the people. There's been a kind of an elite.
So it's a marketing thing.
Yes.
Oh, okay.
Thank you.
All right. I'm just tell me it's marketing. Okay. Well, they have 23 million people on their YouTube channel or something, or even more than that. I think more. I think they have the highest rated YouTube channel out there. So, okay. My recommendation in general is pick one, right?
Mm-hmm.
There are lots of ways to make things really, really hard.
Mm-hmm.
My sense would be, deliver killer software, deliver killer hardware. Don't try and build an ecosystem. It took GoPro a very long time.
Mm-hmm.
GoPro, I know Nick, Woodman pretty well, and there were a lot of different factors that made GoPro successful. That like a significant amount of capital, significant amount of time. They were totally vertically focused early on, so that's the case. The other issue is whenever you're in the early stages of a technology like VR, monetization's challenging.
Yeah.
So that's where if you pick one, it would be interesting. So have you thought through picking one?
So I mean, I think the hardware is really where our strengths are, and also something I just would like to add would just be like being able to educate the consumer. You know, that's something that GoPro has done very well, but also be able to build you know, that kind of community and that education space.
I mean, it's great, but
Yeah.
you don't get paid for that.
Right.
Which like totally makes my job very challenging, because if you're trying to do a nonprofit, that's cool for you, but we don't really want to invest in that. So,
right.
You know, I think it's interesting. I actually asked you to send me your deck. I'd love to take a look at the deck. I'd like to see your software. I think there's going to be a lot of consolidation. I think you're going to be hard pressed to sell your hardware. I know the retail channel well. It's very challenging. However, if you've made some good software, I'm very interested, and there are going to be some big buyers like Google and GoPro and Disney and a lot of other people who are going to buy software in that space. So if you've written some great software, there's a good opportunity.
Awesome. Thank you.
Okay, next up we have Michael in Current RF.
Good evening. My name is Michael Hopkins. I'm the founder and owner and CEO of Current RF. Everybody in this room has got a thief in your house right now. In your business, there's a thief. You know who that thief is? Your electronics. Essentially, you're burning power that you don't need to burn. We have a solution that can basically save power on any computer system, any router, any server on the planet. And I've got a very quick demo here. I don't know, probably nobody can see this except you maybe. 203 mils, I'll take it out, jumps back up to 208. The thief is active. We kill him. We stop him cold. Long and the short of it is, it's a huge market. We've got data, we can get into data centers. $500 million we can basically make just with the existing infrastructure. $100 million per year increase in server sales each year, and that's continuing to increase. On the consumer side, which we can basically get into, $7 billion in the US alone, 400 million growth potential. For data center customers, we can save anywhere from $3 to $60 million per year given a Google class data center. On the commercial side, one power bill per year. All we're looking for is a certain amount of money to get us into mass production, and we're golden. We're gone with this. This stuff works. We basically have all the engineering done. We've beta tested. We've got 2 customers potentially looking at this right now on the data center side, and 1 customer that tested military, 10% savings. That's what we're looking for, essentially capital to do it. Thank you very much.
Great, so I think it's a super interesting space. You know, I talked to you as well briefly, so I realize that there is a fair amount of this. So even technology like Kilowatt was utilizing similar RF, you know, harvesting technology at a kind of utility level scale within your home environment. You know, at larger machine and other companies, they tend to already have some of the frequency filtering technology, mostly because their machines require a cleaner power source, which in turn ultimately achieves your goal. So I guess my question is, A, why didn't you talk to the IBM person? Because CC's got a big data center in Texas, like really big, called SoftLayer. And, you know, that's a great fit. My next question is, so do you have purchase orders yet from these folks?
Not yet. We validated in these guys. They're still wanting to do, especially the data center guy, they're still wanting to do additional testing with other servers. We basically tested on HP servers, super micro servers at this point. I'm not sure what they're doing essentially, but they have, they're wanting to run transient.
Have you talked to Rackspace? I mean,
quite frankly, our biggest problem is having the contacts necessary to get into these places. That's the biggest issue we've seen. I mean, we're sort of working our way out of a small little pinhole, if you will, to get out there. But that's really where we need to go.
Yeah, so, well, I mean, my first answer is if you just hang around in this valley long enough, so I'm sure Rob's had some Rackspace people at his event. I was, at a trade show recently for one of our startups was showing at, and there was a ginormous Rackspace booth, but I'm sure the IBM people, to their chagrin, were on the other side with a giant SoftLayer booth. Right. So, you can meet, I mean, you just met IBM with SoftLayer, and, right. Maybe CC can get one of these over there and do a test. Absolutely. Have you talked to NREL yet?
No, I have not.
Okay, that's a national research laboratory. They love to test this stuff. They do it for free.
Yeah, we have to show them how to do it. We've spent a lot of effort.
I thought you plug that into a computer and then stick a voltmeter on it.
You do.
I mean, that's not high tech.
Well, one of the things about operating systems that is basically they're random. And the key was essentially being able to get rid of that randomness so you can actually see with and without testing. We've got routines we can basically show that. And matter of fact, one of the company in New York, Datto, basically has done the same thing we've done, and they're seeing 3 or 4% reduction.
That's great. Well, I mean, there's Watson over here. IBM's got some stuff. There's a lot of resources for you that so the first thing you shouldn't say is the reason you're not successful is you can't get into these people. Because if you just hang around here enough, you're going to eventually meet them. You're going to eventually get in there. I think the technology is really interesting. I think the savings are interesting. I'd probably want to learn a lot more about scalability and savings. I mean, how much does it cost to produce an individual one of these units?
In mass production, about essentially the IC is 25 cents, the packaging a buck.
So what's the BOM?
The BOM is roughly about $3 to $4. We can sell it for 10 easily.
FYI, BOM means bill of materials. Right. So, everybody's like, what's the BOM?
We're trying to keep it cheap to keep the ROI.
That's great. So I guess my core question is just, why don't you just give them away and offer to share the energy savings? Because my gut is if you could save Google like $300 million a year, I mean, and you probably have what, at $3 a unit, maybe a couple $100,000 worth of those things involved.
Right.
Last time I checked, if you rolled in and said, give me 10% of what you save, as long as it's not going to hurt their tech, they might do it.
Yeah, it's a simple thing. Plug it in the USB port, you're done. That's really all you have to do.
Well, I'm sure someone, Google Ventures would love it. There are a lot of people that love that. I mean, you should come to more Rob's event because all these people are here.
Trying to.
All right, great.
Thank you very much.
Thank you.
Okay, next up we have Russell and Skin Sampler Technology. Yeah, let's hear it for Russell.
Oh, hey. All right, so it's not fair because I've actually seen Russell before. I've actually judged you before.
Okay. Well, maybe these guys will present. For these guys. See this guy? Okay. Well, then I'll present to them. Okay.
Oh, pitching me, buddy.
Okay, I'll pitch to you. Okay. Hi, I'm Russell Hanabusa of Skin Sampler Technology, and we make a new kind of identification device. This is it. It's called a skin sampler. It has some unique identification features. If it touches you, it'll take and hold your skin and therefore hold your DNA identity. It's also wirelessly detectable and uniquely identifiable. They have many applications stemming from, ranging from property protection, military intelligence, any kind of case where you want to identify someone or some property. Okay? One of its uses here is with this, protecting this little girl here. Each one of these devices is a skin sampling device. If any kidnapper tries to come over and grab her and take her away, they will scatter and fall, taking his skin and becoming wirelessly detectable DNA evidence against him, which the police can just scan for. Okay? They're very cheap. They can be used on almost any application. They don't use batteries. They never run down. They can incorporate DNA preservatives, which will make the evidence long-lasting. They'll contaminate him and his car, and we can actually make it so that her phone will actually call automatically for help upon the attack, transmitting its GPS location, calling a security service, turning on the speakerphone, and allowing the police to know exactly, once they validate the attack, they can send the police to her attack site and program their wireless detectors to alert upon any detection of any of her tags, be it inside the kidnapper's car or in his home. Okay. With this information and with the data that will be streaming from this phone up to the cloud, we will be able to identify almost every tagged item, be it this microphone or that camera over there or some person, almost anywhere at any time in society. Okay, that's the vision. Thank you.
So first thing I'm going to ask is, so I saw you 6 months ago.
Yes.
Tell me where you're at today versus 6 months ago.
About the same. About
Okay.
The same, yeah.
Okay.
We haven't found a licensee yet.
Gotcha. Okay. I generally think what you're doing is quite interesting. I think trying to frame the use case down to the level that you've kind of taken it to, I think is challenging. I mean, I think there's a lot of ways to use your tech.
Yes.
I already suggested that I really think you should be using it in things like agriculture, animal health, and elements like that are areas where they buy a lot of these things. If you can prove an inherent return on investment, it makes it very helpful. I think the general element of the kind of personal security side of the story is a pretty crowded space. And you've got a lot of wearables that have been created already, which have triggers. Philips just launched their new product, which actually has motion sensing in it. So if grandma falls down, or if she falls down, there's an immediate alert sent to the cloud, to the data center, et cetera, off that. So I guess my question is it still a solution in search of a problem?
Okay.
All right, and then really the issue is finding the application first, right? So you've got a solution, now you're looking for a problem to solve.
Right.
What we like to see is you found a problem and now you're gonna go solve it, right? So my sense is that I think you really need to look at some of these verticals. I think the licensing story is challenging for us on the venture side. We like to see companies that are going to build and grow on their own. And in that particular RFID kind of driven space, because that's right, RFID driven tags, right? And the general concept is that the attacker kind of gets some sticky on them, and then you've got an RFID tag to find it, right?
Well, actually, each one of these will hold his DNA. So if the police find them
there's
anywhere,
a little sensor on there, right?
No, it actually scratches you. So it takes and holds your skin.
Okay, so it's like a Band-Aid with an RFID thing on it, right?
Right. Well, more like sandpaper.
Okay, I'll buy that.
It actually has a texture, like sandpaper.
Got it.
So
right, no,
actually
I
takes-
get it.
yeah,
But if
yeah.
he's, or she's well clothed wearing gloves, that's not as effective, is it?
It'll still get their dandruff on the outside of their clothing, which is also their
hope.
skin.
Wait,
yes. Well, they have to hope it doesn't. See, that's the thing. Yeah.
Okay, I'll give you that. So I guess my just core question is, trying to find the right way to use this in kind of an industrial area. And I think what you're doing with kids is very honorable, and I think that's probably a non-profit corporation. And if you can sell a bunch of these to track cow DNA for $1 billion, you can start a foundation to get them away.
Okay.
That's my general thought. All
All
right.
right,
Thank you.
Thank you.
Okay, that's the last of our presenters.
All right.
Any feedback, any thoughts?
Okay, well, first, I applaud all of you guys for coming out.
Let's applaud them all.
That's right. Applaud them all. It takes a lot to get up there and do that. Sorry if I sound a little tough. That actually isn't very tough from the venture world, right? Usually we just wouldn't want to say anything. We'd smile and, we'd all go about our lives. Now, that being said, what you're doing is great. The first step is coming here, getting up here, and talking about it. And you never know who you're going to meet when you're here, right? You might meet someone from IBM who has a data center who might be able to do something for you, right? You might meet someone who's coming out of one of the entertainment categories, We could see something in the RFID side that makes it meaningful. On your end, you never know. Could have been one of GoPro's investors in the room. So you always want to be out here, and I applaud you guys for getting up and doing that. This isn't easy stuff, right? And you got to remember, it's equally hard for us. Because if you think, I saw 5 of you today, my day from 8 o'clock this morning until I showed up here was seeing about 10 other folks like yourself. So my job's really hard, and I always try and be as nice and thoughtful as possible, maybe a little snide occasionally for it, but it's good. It's good. Our job here is to, rough you up a little bit because, when you are in front of someone who's theoretically going to write you a check on the spot, I want you to think back and go, oh, wait, F beat me up on that. I'm not going to say that again. And if there was an ounce of value that came out of it that we were able to deliver through Rob and myself tonight, then that was a huge success for me. Because remember, I've sat in your shoes. and bootstrap this. And it's really tough. And, the one thing I will say is you're the best time in the Valley in history to do this. You're amongst a bunch of other people who are trying to do it as well. There's no place else in the world that's like this. And you can go get a team from Pixar. You can go get it tested in a data center. You can go save some lives in that particular case. You can go change the VR world. That's cool. Doesn't happen anywhere else. So stick with it, find a cool partner, and just keep building it. Because if it's not this one, it's going to be the next one, and the next one, the next one. And that's what you have to keep fighting for out there. So thank you for coming out here, and congratulations for doing it.